Hey folks, let me ask you, do you ever get frustrated? You get into a trade, maybe it breaks into a new all-time high and you're thinking, where's my target? How do I know where this trade should go? Should it go a lot higher, a little higher, super high? Should I go to the moon? Get frustrated, right? How do you target when you're trading in territory that you've never traded before? I'm going to show you a technique that is a fantastic tool that we use every day, and I'm going to show you some live examples right now that are working exactly as we speak. Let's go. Hey everybody, it's Jeremy Whaley here from Trade Maestro. You can find us over at trademaestro.com. Hope you're doing fantastic today. If you're new to the channel, please like and subscribe because it really helps the algorithms, and then you get all the little notifications whenever we do new market updates and videos like this. And you don't want to miss the cool tips and tricks like I'm going to share right now. For example, if you've ever been trading in a trade, it could be a stock, crypto, whatever you're trading, and it's breaking into new all-time highs. And you're thinking to yourself, I have no idea how high this thing could go. How do you know? How do you know where you should target it? When do you take your profit? When do you get out? Well, if you've been using support and resistance in the history, it's really easy to know where your targets are because you just trade to your support and resistance zones. And that's something we've been talking about all month. I've got some other videos on the channel here and actually a new webinar on our website called the Market Matrix. I'll put a link below. You can check that out. That will teach you the support and resistance part. But what about when you're breaking into new territory? It's new all-time highs, and you have no idea how high should this go. So I want to come over here to a chart. This is a chart on a stock called Lulu. And I know it looks like a total mess right now. So this is ticker symbol Lulu. But I want to highlight, notice where we traded to. So right here to these targets, right? Exactly where these lines are drawn. How did we know exactly where these turning points would be? Well, I'm going to show you right now how we set this up. Okay, so this was a trade that we did just kind of towards the end of the year, around November, December. And I'm going to show you how we set it up and where it's going from here. Okay, so that's pretty cool. So here's what I'm going to do. In TradingView, if you don't have TradingView, you should definitely get yourself TradingView. I'll try to put a link below for that if I remember. In TradingView, in the upper right corner, you can select the main layout, and I'm going to just go to an alternate layout. So what this allows me to do is it allows me to do an alternate analysis that doesn't necessarily mess up my main analysis that we've already got set up, that we've done in our classes and stuff. So you'll notice in here that we've already got some lines drawn. I'm actually not sure when I drew these lines, but let's just look at them really quickly here. And they're pretty spot on, so that part is right. That's our support and resistance. Again, if you didn't see the video last week, I did a whole 15-20-minute video on how to draw those support and resistance lines so you know how to get into that. So that's somewhere here on the channel. Try to put a link for that as well. What I want to show you right now is how do we project moving forward. So to do that, I want to show you kind of towards the end of the year last year, right in here, this trade took off. And of course, we have some lines that we could draw from, but how do you know up here? How do you know that this is a target? And what I want to teach you about is a tool called the Fibonacci tool. Now, this goes back to Leonardo Fibonacci, like all those hundreds of years ago, and the golden ratio. And what it does is, I can't tell you the math for it because I'm not that smart, but basically we take trigger points or entry points and we use those to calculate. And of course, the tool does all the work. You don't have to do any math here, but you just put the tool on there and it will calculate where your pivot points should be moving forward. It's incredible. And I can't tell you how it works. I mean, I know how it works. I just don't know why it works. It's like the golden ratio thing. It works. It shows up in nature. Okay, so I'm going to show you how it works in the stock market. And you're going to be like, oh my gosh, that is so cool. So what we're going to do, I'm going to take the screen full screen here. I'm going to use another really cool feature in TradingView called the replay tool. It's so useful for testing stuff. So it's right here. It's called the replay tool. And I'm going to click on that. And we're going to go back in time as if it was last November, about right there. This is about when we took this trade. Okay, so here's what we were looking at the time. Something like that right there. Now let me zoom out and I'm going to make sure, okay, you can see that we had a pivot point here and a pivot point here. So that's why we had these two lines in there. Okay, so those are good lines. They're drawn. If you don't know how to draw those, again, go watch that other video, but we draw off the closing price. So those are nice clean lines. All that looks good. So moving forward here, when we see this trade setup, the first thing that we're looking at is, are we above the averages? And we are. I'm using my Trade Maestro moving average module that we had programmed for TradingView. So you can see it's all green. So it makes it really easy. Just follow the colors here. We're green. Okay. This is your trade entry. It broke out, it pulled back, it tested our support, and it's continuing. There's your continuation signal. Okay. So for those of you who know my signals, there it is. Let's see. I don't have the indicators on here. So let's do, let's add our stochastic. At this time, Stokes had not made its turn yet. It was about to, but it hadn't made its turn yet. We might have been a day or two later than this. So here's what we want to do. Let's see. There it is right there. There was our setup right here. Okay. So you can see your Stokes is crossing. Everything was in alignment. Now the question is, how high will it go? Well, target number 1 is going to be right here. Target number 2 is going to be right here. Then the question is, where does it go from there? Because it's all-time highs. So if you can't see where it's going, you don't have any reference from the history, you're just guessing, right? So what a lot of people would do is they would take this trade, they would trade to here, then they would trade to here, and they're just done. It's like that's as far as they can go. But if you know anything about Lulu, Lulu's been on a tear. I mean, all year last year, it was an incredible trade. We had lots and lots of great trades with it. And the end of the year was a really, really good run. And we're setting up for another good run right now. How do you know? How do you know where it goes? So I'm going to show you right here. We're going to come over to the left. And this was a harder one. Sometimes your fib swings are really, really easy, but this one's a little bit harder. But come over here to your left, and I get my pen to draw. There we go. This kind of top tool here, you see these lines. And if you hover over that, there'll be a little, let me get rid of that. When you do the little breakout, you'll see there's a fib retracement tool and a trend-based fib extension. These are the two fib tools that I use the most. Okay, and I'm going to use the trend-based extension. Now, before I do it, let me tell you how it works. What it does with the trend-based extension is it will take your swing points, so like these right here, we're going to take 3 of them, and we're going to calculate with those. So I'm going to actually use these 3. I said this is a little bit harder because it's a small range that we were trading in. When you're trading in a larger range, it's a little bit more obvious. But here, it was a fairly small range we were trading. There's point number 1, point number 2, and point number 3. So I'm going to make this fib line drawn on that, okay? Trend-based fib extension. It's going to come right to that point that I just showed you. Click on it. Come to this one up here, click on it, come down to this one right here and click on it, and boom, it just extends my lines. Now you have a new grid, okay? So again, what it did is it drew from here to here to here. It's not hard. You guys can see it really easy. I'm going off closing prices, okay? Now the first thing that we're going to see is do the lines line up with anything that are consistent with what we've known in the past? And it turns out that, yeah, we're really, really close right here, okay? Really, really close. So we know that these lines are in agreement. Oh, right there, we had another one that lined up. So this fib projection is going to be pretty good. There's other techniques that I can teach you in a different video when we have time to do more, where we can layer multiple fib projections, and we call that confluence when they come together. Really, really useful. That's my favorite way to use these. But I'm just going to show you what we did here. This is the actual setup we did. So we set this trade up. And the first thing that we did is we used known targets. Okay, so we're going to set an entry in here. Go full screen for you again. Do an entry just as we break to the new high. We put our stop just below our 10-period moving average. Target number 1 is the known target here. That's about a 1-to-1 reward to risk ratio. Not great, but not bad. Our second target was right here, around 477. That was a 4-to-1 reward to risk ratio, okay? Now, if you know anything about reward to risk ratios, that's really good. In fact, whenever I teach people money management principles in terms of your risk management, people always come back and they're like, oh, I don't know where to find 3-to-1 or 4-to-1 reward to risk ratios. They're all over the place, folks. Here's a perfect example right here. So limit yourself to trades that have good 3-to-1, 4-to-1 reward to risk ratio. So what you can see on the screen here, sorry, I'm kind of jumping around a little bit. What you can see is there's the trade setup, and we've got targets here. We got a target here. Those were known targets. And then we have these targets up here, and these are kind of your questionable. We didn't know if we were going to get an all-time high yet. We didn't know for sure. But let me show you where this trade went, okay? So we're going to scoot this forward kind of one day at a time and let it play out. And boom, we triggered the trade. First place we went was our known target. It's where it always goes. Always goes to the first known target. Okay. Now, what's the next thing that it did? Let's move it forward a little bit more. Okay, next thing, it pulls back. That's almost always what happens. Whenever you get into a trade, when it hits a pivot point, it almost always goes the opposite direction for a little bit, okay? So now we're going to keep running this thing forward. Where does it go next from here? Breaks out. Boom. Where did it stop? It literally stopped on a fib projection right there and makes its way to a sideways move. Now look at this. Okay, so we get into a continuation pattern at a fib projection. We were short of the target, but we were very much right on the grid. Okay, that's a very important principle to note. So in this example, what I teach people is when you get there, just tighten your stop. Lock in your profit. You got a lot of profit in here. You should have your stop up underneath your 10-period moving average. Lock it in and let the trade run. Okay, sure enough, boom, we break out. Where did we go? Look, we broke out of the high. That's the all-time high. And where did it stop? Boom, right there on a fib projection. Boom, just like clockwork. Okay, isn't that crazy? So this is how we project. This is how we go into unknown territory. Now, one of the things that happens when you're in unknown territory for the first time, when you break out of an all-time high, almost always the first thing that happens is it breaks out and it comes back and it tests that old resistance as a new support. So as you learn more about support and resistance, you'll learn to recognize that pattern. So we didn't really want to take the trade right here. Very overbought. You know, there's a lot of reasons to slow down here. We took a lot of profit here and let it play itself out, which all pivoted. You can see here, it all pivoted on that Fibonacci projection. Now what we've seen, and I want to run this forward here because it took a good break, and now we're getting a new setup. This is current. This is real time right now, okay, as I'm recording this video. So I'm doing this video just for reference because you're going to want to go see this probably. Just for reference, I'm doing this video on the 21st, the evening of the 21st, 2024, January 21st. Okay, so we just set this trade up tonight in our profit picks class. We just did this trade. This is the one that we set up for this week. But the challenge is, well, how do we know where it's going to go? Well, as opposed to a few weeks ago, we didn't have a lot of data a few weeks ago, and we weren't really in all-time territory yet. We were just projecting in case we got there. Now we have a lot more data. So what I want to do is I'm going to show you two more fib projections that are going to really help you. The first one that we're going to take is going to go from this point right here all the way back to this bottom right here. Now, if you remember, that was our original drawing point. Okay, so I'm drawing these together. You want to use related waves. And I'm going to use a different fib tool. I'm going to use the fib retracement tool. It's the top one here. Okay, so I'm going to click on that, and I'm going to draw that entire wave that I just showed you. And boom, there it is. Now what you see is that we start to get different lines and they start to come together. This one came together. This was the one we just drew, which was just a little bit higher than our original projection. Our original projection came in here. And you have to understand when you're dealing with fibs or any support and resistance, it's not like an iron box. You don't have to stop there. It's kind of the target. That's where you get to. But sometimes it'll go a little higher. Sometimes it'll go a little bit lower. So we're drawing off the actual mark now where it really went. This is where it actually went. And what we're looking for is we're looking for price points that come together. So the next thing I'm going to do is I'm going to do that 3-point tool again. Remember the 3-point tool? And I'm going to go from that same starting point down here up to the new peak and the new valley. So before I did this one back here, I'll change pen color so you can see it. So before I did this point to this point to this point, that's 1, 2, 3. That's what I did for the first projection. Now what I'm going to do is I'm going to go, again, I'll change my pen color back to green, just so you can see it. This point to this point, that's number 2, to this one here. So it's a much bigger wave, and it's going to give us a little bit bigger picture overall. So I'm going to use that with our 3-point tool and see what kind of what we call confluence we get together. So 1, 2, 3, there it is, and boom. Now we've got a new grid. Now watch what happened here, okay? You'll notice that this projection lined up with this one. That's important because it tells us that there's confluence happening here. So this little range right here is a very, very important pivot point moving forward. That whole little range right there. We have 2 different tools coming up with the same range. This range right here becomes pretty important. Okay, I kind of drew that one down here a little bit, but it's there. Right here we have confluence. These two are almost to the penny spot on. Almost to the penny. This becomes a very, very important pivot moving forward. So 590 becomes a target. So what we can do here is we can actually come in and we can draw and we can say, okay, right there, that's going to be a target. Right in here, somewhere is going to be a target. Okay, something like right in there. And we can say right here, it's probably going to be a target because we got a lot of lines starting to converge there. Now, this is unknown territory. We're just giving ourselves a target, giving ourselves a range where we say, okay, these things are all coming together. We know that this is all coming together. It's already established right there. There's your grid right there moving forward. So now what you have, even though we haven't traded in this price range before, you have your grid where this thing's going to go. So now you can do a trade setup. You enter here, target 1, target 2, target 3, target 4. Now, will it trade to all those targets immediately? I don't know. You know, it's probably not going to run immediately to all of them. Usually what happens is it'll go up to target 1 or target 2 and then pull back and then go up to 3 and then 4, or maybe it makes the reversal. But now you have a grid. Now you know where it's running. And then as we establish the new future pivot points as we move forward, you'll be able to come back and reference that, and you'll clean up and you'll take out your fibs and stuff. Because once it's established, you know, known price points are more important than unknown. But what this does is it at least gives you something to work with, and it's incredibly useful and incredibly beneficial. When we have any trade that is charting in new territories, never trade at those all-time highs, this is the tool that I use. And I use those two, the retracement tool, which will give us the extensions, and then I use the trend tool, which has the 3 points. Those are my two favorite ones to use. If possible, I prefer the trend tool, this one that I just did here at the end. I love being able to use 1, 2, 3 points and get that extension moving forward. It's just such a great tool. It's incredible. And then from there, everything starts to line up the way that we do all of our other analysis. So this is just kind of one of those unique tools. There's a lot of fib guys out there that this is all they do. They just do fib, 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 fib. That becomes overwhelming. You end up with a lot of fib lines, and you know, I don't always find it useful. I find a lot of other techniques to be a little more useful sometimes, but in this scenario, this is a great tool to use, okay? So I hope this has been helpful for you. If you haven't subscribed, obviously subscribe to the channel here so you can get some more of this. And check us out over at trademaestro.com because I have a webinar over there that I just put out last week called the Market Matrix. It's about a 2-hour teaching on this principle of support and resistance. I go into the detail of how to draw it. I go into the detail of just all of it, charting it, how it works, all of that stuff called the Market Matrix. I'll put a link below, and I think you'll really like it. And if you like this video, it will really build off of that, okay? Hope you guys have a fantastic week moving forward. Happy trading to all of you. I look forward to next time. And until then, happy trading. We'll talk to you soon.